right, let's do calls of the day. Caterpillar, target to 414 from 396. Truist reiterates that as a buy. Weiss, you own the stock.
Yeah, again, for me, it's a hedge against a heavy tech portfolio and growth portfolio. We got some good news today on the nuclear plant that's going to be built in New York if they get approvals. So obviously that'll help Caterpillar. So I think that with the reshoring of America, which has been going on now for a number of years, it'll help them quite a bit. They may lose the Chinese market, but they can make it up here.
Joe, Constellation, very much part of that story that Weiss just mentioned. According to the Journal, New York to build one of the first U.S. nuclear power plants in a generation. It would be on the grounds of the three existing potential sites under review would be include the grounds that are already operating, all owned or majority owned by Constellation. So Vistra got their price target up today. Constellation got the price target up today, both at J.P. Morgan. How do you see this?
This is all part of a larger allocation within a portfolio where utilities now are being thought of the way oil was thought of 15, 20 years ago. So critically important as it relates to serving data center demand. You're seeing deals with a lot of the mega cap companies like Constellation with Meta and previously with like Microsoft. I think it's secular. I think the momentum is clearly secular. I know Vistra is down today and people on social media are saying, oh, that's an indication of some form of exhaustion. Yeah, maybe in the near term it is, but longer term, I think you have to have the exposure. I like Constellation Energy a little bit better than Vistra, a little bit better positioned, and it's a longer term holding, I think, for anyone that gets involved.
Amy?
Yeah, we own BWX in the nuclear space. It's been a moonshot, up 40% in the last few weeks, so I would sort of hold off adding to it here. But longer term, we really like the positioning. They've won a number of contracts recently. Canadian company, about $13 billion market cap.
You get a 1 month look at that, guys, so we can see what Amy's talking about, the move that the stock's had in the last handful of weeks. There you go.
There you go. Exactly.
Yeah, it looks a little better.
Exactly.
Tells a good story there, doesn't it?
Yeah, it's been a great call.
Okay. EOG target to 140, a couple bucks higher at Wolf.
Yeah, from 138 to 140. Yeah, big move there.
You take every dollar you can get.
Exactly. I will. No, we like energy generally. I think the rest of the world is responding to this trade war by stimulating, and so we're seeing U.S. production sort of peaking and turning down. So generally speaking, we like energy, really cheaply priced and good low-cost producer.
Doordash, 52-week high, Joe. Upgraded to strong buy from Outperform at Raymond James.
Do not stare at the PE on this one because it's triple digit for sure. This is not growth at a reasonable price. This is growth, though, for sure. It's a name that's really been rediscovered in the last 12 months. If you remember back to 2021, this was one of those do-it-yourself type of names. We have still not exceeded the November of 2021 high. It looks positioned technically to do so, although I have to tell you, I'd be a little bit cautious about going out and buying it up here.
All right.